Hi, this is Alessio. Hope you're well. In this video, I want to bring your attention to a very interesting piece of data and information here on Bitcoin. So we're going to take a look at this chart here in a few moments and explain to you what this potentially could mean regarding Bitcoin. Now, before we do that though, let me just give you a bit of a recap. First of all, this is the daily chart of Bitcoin, but actually I want to go on a higher time frame today. Go on a weekly chart. So this is the weekly chart of Bitcoin. And the reason I want to start with this chart is because we're actually about a year, almost a year from the crash that occurred in Bitcoin. You can see in March of last year, almost a 50% crash in Bitcoin that occurred last year. And you may recall that in the spring of last year, April of last year, I got quite bullish on Bitcoin. In fact, I said last year in the spring of 2020 that very likely we're beginning a bull market, an uptrend in Bitcoin. And you can see why that was, because you can see that Bitcoin managed to climb above its 21 weekly average, a very important level in technical analysis. So again, just to show you this, you can see Bitcoin from the crash managed to recover quite quickly, as a matter of fact, and get above its 21 weekly moving average. Anytime price gets above its 21 weekly average, the assumption is on the balance of probabilities that we're moving towards an uptrend or bullish environment on the chart. So again, you may recall that last year in 2020, in the spring and also in the summer of last year, while most folks out there were very bearish, in fact, a lot of people out there were calling for Bitcoin to drop back down to its 2020 lows, I remained bullish. And I said in September of last year, I said in my video that the next time Bitcoin goes above 10,000, that could be the last time we'll see Bitcoin sub 10K. Now, before I show you this chart over here and what this potentially means, let me just say this, that the last time Bitcoin touched its 21 weekly moving average, as you can see from my chart, was, take a look, that was in September of 2020. September of last year was the last time we touched base with the 21 weekly moving average. Now you're probably thinking, well, so what? Let's go on this chart over here. Usually in a bull market, like for example, the last bull market in Bitcoin from 2015 to the year 2017. And you'll see a very interesting pattern that I mentioned before in my previous videos. And you will notice that usually in bull markets and uptrends, what most markets, and in fact even Bitcoin, what it does is that it pulls back to its 21 weekly moving average. So what happens is, you can see here, after the bull market started in again, September, October of 2015, what happened was that Bitcoin rallied, and then pulled back to its 21 average, and then boom, it bounced again. And again, you can see it happening again. Pulled back to its 21 average, again, held it, and boom, bounced again. Again, pulled back to the 21 average, held it, and then bounced. Pulled back to the 21 average, bounced, boom, and then pulled back, bounced, boom, and then pulled back, and so on, bounced again, you can see here. So during a bull market situation, you see this pattern repeating over and over again. A pullback to the 21 weekly average, and then rallies higher again. And by the way, the same thing happened in the previous bull market in Bitcoin from 2012, 2011 towards 2013, as you can see from this chart. Yeah, so you can see very similar pattern. In that bull market, price pulled back to its 21 average. You can see, held it, boom, bounced off, again, pulled back, boom, bounced off, and so on and so on. Okay, now you're probably thinking, all right, so what can this tell us? The reason why this is very important and why it matters is because, as you can see here from my chart, what I've done here is I've calculated for you the distance in time, the duration between the pullbacks. So what I've done here, as you can see here in blue, these blue date ranges you'll see here, what these are telling us is the duration in time between each pullback. So as an example, let me just show you. I've calculated here the duration in time between this touch of the 21 EMA and the next touch, or the next pullback to the 21 average. And you can see this duration was about 23 bars, or 23 weeks, because it's a weekly chart. It's a weekly chart. So 23 weeks is 161 days, as you'll see here. And this pullback here, and this one was 10 bars, 10 weeks or 70 days. And then from here to this one here was 16 bars or 16 weeks, essentially 112 days. You get the picture. And by the way, I've done the same thing. I've done the exact same thing with the previous bull market as well. Now, what I've done is I plugged these numbers, I plugged these durations into a spreadsheet for you. So if you, like me, are into statistics and data analysis, you'll probably like this. So basically what I've done here, as you can see here, I've plugged these numbers, these durations in time for weeks and days into the spreadsheet. And here we have some numbers for you, as you can see here. So the mean average, the median, and the shortest and longest. Now here's where it gets very interesting. We can see the mean average of the duration between the pullbacks of the 21 weekly average is 14 weeks. So that's the average duration between each pullback, 14 weeks, 14.7 weeks to be more exact, and 103 days basically. By the way, the median figure is, there it is, 13 weeks. 13 weeks or 91 days. Okay, so basically putting it very simply, it's about 13 or 14 weeks for the median and the average respectively. In other words, statistically speaking, the mean average between the duration of the pullbacks, between one pullback and the next pullback to the 21 weekly average, is approximately 14.7 weeks, or 13 weeks if you look at the median figure. So that is what we saw in the last major bull market in Bitcoin in between 2015 and 2017. Let's look now at our current bull market, our current uptrend in Bitcoin. And you'll see something very interesting and fascinating, as far as I'm aware anyway, which is this bull market here is exceptional. Why? Because let's just grab our date range here. If we go from the last major pullback, the last time Bitcoin touched base with this 21 average, which was again in August, September, I'm going to say late August, September of 2020, and we just do from there date range to now, look at this, guys. You can see this is the longest Bitcoin has ever gone between one pullback of its 21 average and the next one. In fact, we haven't even pulled back yet. As you can see here, we have not yet pulled back to the 21 weekly moving average, currently about 39 to 40,000 level. So guys, this has never happened before. We've gone 29 weeks or 203 days without a pullback to the 21 weekly moving average. Again, let me show you this one more time. If you look at the data, you will see the average figure was 14.7 weeks. The median figure was 13 weeks. Okay, Bitcoin has never done this before. In fact, you'll see the longest it's ever gone between a pullback to the 21 weekly average was 24 weeks, as you'll see here. And that means statistically, let's do the date range one more time from that low. Let's move forward 14 weeks, and let's drop the bar there. There it is. So essentially, if we'd followed the average or the median figure for a pullback, we should have had that. We should have had a pullback really in this, you can see by that time here, by that bar. That would have put it approximately, that would have put it when? December. So ideally, we should have had a pullback by December of last year. We didn't. We have gone now beyond what is average, beyond the median figure for a pullback to the 21 weekly average. Essentially, we've gone 29 weeks or 203 days without any pullback to the 21 weekly moving average. It is unusual, but again, it does happen from time to time. So guys, my outlook here on the chart of Bitcoin really has not changed much from last time. We've gone now 29 weeks or 203 days without a pullback to the 21 weekly average. This is beyond what is average, beyond what is the median figure. I still think it is more likely, more probable, that we'll see a pullback to the 21 weekly average here in the next few weeks and months. Now, I know what you're probably thinking. Is it possible for Bitcoin to just continue going up higher without a pullback to the 21 weekly average? Yes, it is possible. Of course, anything is possible. But we're not asking here what is possible. We're asking what is likely, what is probable. And based on the data, based on the statistics, I still think that having gone without a pullback for 29 weeks beyond what is average, beyond the median figure, so that is why I still think there's potentially more risk for Bitcoin in the next few weeks than potential gain. And that is why my higher probability expectation or scenario for Bitcoin is for a move or indeed a pullback to its 21 weekly average in the next few weeks and months. So I think as long as Bitcoin remains below the 61,000 level, pressure could remain to the downside and we could see a move toward the 21 weekly moving average, which we have not tested now for 29 weeks, something which is beyond average. So I think that is much more likely. All right, guys, I hope you found this video to be useful. If you have, please give it a thumbs up. Thanks very much, guys. Again, please remember, if you're not subscribed, please do subscribe today. And also please hit the bell icon to make sure you're notified of our future video updates. Thanks a lot. Bye for now.